Welcome back to Cash Current. If you're new here, don't forget to hit that subscribe button and ring the notification bell to stay updated with our latest content on finance and investing. Today, we're diving into the world of options trading, a powerful tool that can help you leverage your investments and manage risk. Whether you're a seasoned trader or just getting started, this video is packed with valuable insights. So, let's get started. What are options? First things first, what are options? Options are financial derivatives that give you the right, but not the obligation, to buy or sell an underlying asset, like stocks, at a predetermined price before a certain date. There are two main types, calls and puts. A call option gives you the right to buy, while a put option gives you the right to sell. How do options work? Let's break down how options work with a simple example. Suppose you think a stock currently trading at $50 will go up to $60 in the next month. You could buy a call option with a strike price of $50. If the stock goes up to $60, you can exercise your option to buy it at $50 and then sell it at the market price, making a profit. If the stock doesn't reach $50, your loss is limited to the premium you paid for the option. On the other hand, if you think a stock will go down, you can buy a put option. This gives you the right to sell the stock at a predetermined price, protecting you if the stock's value falls. Key terminology and concepts. Strike price, the price at which you can buy or sell the underlying asset. Premium, the cost of purchasing the option. Expiration date, the date by which you must decide to exercise the option. In the money, IDM, when exercising the option would result in a profit. Out of the money, OTM, when exercising the option would not be profitable. Further details of option trading we discuss in another upcoming videos. Thank you for watching.